Let's talk about this nice trade setup that I took today. It was for 264 ticks total. I just entered the market in with two contracts. It was off of the Nasdaq futures, okay? And it was a long entry at an area of demand, okay? It's for all of those that are first-time viewers, I trade supply and demand primarily, and I'm just looking for aggressive areas of buying within the market. So I'm going to show you this trade entry to set up, but first and foremost, I always want to emphasize the importance of market structure, being able to read and understand the direction of the market. Now, how do I go about doing that? I always like to look at a higher base chart first to figure out which way the market is moving, either up or down. And, you know, this was a 264 total tick trade that I took today. And what we'll start with now is just taking a look here at the structure of the market pretty much, okay? So, you know, if you've been looking at the market, yes, we've been selling off, all right, to the downside. Again, it's all about following market structure, just the flow of the market. Now, last Friday, which was the 26th, we particularly moved sideways, and that's why I have this line up top here, this arrow at the bottom and at the top here. This showed me that we are in a range, moving sideways, and we started to really set itself up. The market did, put itself in a range on last Thursday. It was moving to the downside, and then we got this pushback up to the upside where we broke structure above this area here at what was this, 19,245 area, okay? It pushed up, broke structure above there, and then it pulled back. So you have to look for things like that. Even, you know, at any given point, the market can turn back around, reverse, and start to move in the opposite direction. When I saw this structure break above this area, I figured that the market is probably trying to reverse and probably trying to gain some composure to maybe push back up. Now, with that said, it left this low down here at the bottom, and at the break of structure here, it made this high here. So we're in between, we have a leg here that we're in between a low and a high here. So the market's either going to do two things. Either it's going to break structure back to the upside, or it's going to break structure back to the downside. All right. So at the pretty much closing into Thursday's trading session last week, the market pushed back down, trying to test the low of Thursday's trading session. Then what it did was it didn't come down there and test the absolute low, but into the overnight session from Thursday into Friday. Well, let's just say Thursday, because the market opened back up on Thursday at 6 p.m. Eastern. Into the overnight hours, the market started to push back up, okay? But it didn't really, you know, push lower to break this structure down. I mean, not structure, but break this low down here. But it kind of moved sideways early Friday morning into the opening hours of the market. Now, come Friday, I saw the market kind of moving sideways right here, all right? And I figured, okay, this thing is in rotation right now. It's kind of moving sideways. It needed to pick a direction, whether it was going to break this high up here from last Thursday or break this low. Because what happened is, if you look at it at that point, we're just in between a leg. So be careful about trading in the middle of something, okay? In the middle of a leg right here. Now, it did push up here on Friday before the market opened up. It made a high here. It pulled back, and then it broke structure. It took out this area here, structure above here at 19,241. And we broke this area of structure right here at 237. Okay, so we pushed up, pulled back, broke structure, broke here. Okay, and we broke this area right here. From there, we got to pull back into the closing of Friday's session. All right, and you know, into the opening hours yesterday at 6 p.m. on Sunday Eastern time, the market broke up. Okay, it broke structure above here, and it took out this slight area, this small high right here as well. Okay, so pushed up, pulled back, broke structure again. So this was into the overnight hour, especially during the London session. Then we got a pullback. It broke higher here. It broke small area structure right here to the upside at 19,335 area right there. Okay, but still the market, this is right around the time when the market was getting ready to open up. Then it pulled back. Okay, it pulled back here. This is on my 120 range chart. Now there was a demand area resting right here, as you can see. And to anyone currently watching that's part of the, part of our channel already, the community, that blue squiggly line there, just disregard it. I was just testing something. So, but that yellow line is the VWAP, all right? But anyways, what I was looking at is, so we had into the, right before the opening, we broke to the upside. We broke this area of structure right here, pull back. There was a demand zone resting right here, but it broke through it. If you see that wick of that candle there, it came down. But this is support right here. So it bounced off that area of support, and then it broke higher. Okay. Now, remember what I talk about areas of liquidity resting at swing lows and swing highs. So there's liquidity resting above this area here. So it went up there, it grabbed liquidity, pulled back, and then it came up here again and grabbed liquidity again before it turned back around and started pushing lower. All right. So anyways, the market went up there around 10 and grabbed liquidity at the highs up here, and then it started moving lower, and then it did break structure back to the downside here at 19,220, say 222. Okay, but what I was aiming my eye on was this area of demand resting down below here back at 19,135. I saw that area of demand, okay, because we had a structural break to the upside, aggressive buying right here that left behind this area of demand right here. So I waited for the market to get back to that area. It didn't happen to around about 11:30, 11:35 time frame. And if you look at the area of demand resting right here, we're also at the latter portion or bottom portion of a high volume area here. I talk about using a volume profile, not to get into a trade, but using it as far as like a GPS. When I'm looking at a zone of interest, where did what did volume look like in that area there, or volume that was created, in this area here when it got back here, it was at the latter portion right there. And another thing that really piqued my interest was, if you see where it made its high at, and then it made its pullback, and then it broke structure up here, look at the zigzagging that it did right here, kind of just zipping back and forth, push down, pull back, push down, pull back, back and forth. So this was buying momentum or buying power starting to stack up in the market to where buyers were really starting to show their hand that they were interested in pushing the market higher. So I waited for the market to come back to that area, and all those things kind of added up there. We're at a high probability demand zone, okay, where there's a gap. The market's been unmitigated there. It's not been tapped yet. I started seeing when the market was kind of building up this area of support here where it wanted to push higher, and we're at the lower portion of a high volume area. So when I saw that, I basically just moved down to my lower base chart to look for an entry point, which was on the 24 range. So those that have been following the channel for some time know that I primarily, when I move down to a lower base chart at the market up a zone on my higher base chart, because we're talking about using chart confluence, looking for two means of confluence, meaning marking a higher base chart up, and then with in this case here, demand zone, and then moving down to the lower base chart to look for a demand setup as well. So I'm looking for a structural break on my lower base chart, which is my entry chart at this point now when I'm down, looking for a demand setup. So I'm looking for a structural break. The market starts to move higher, makes its ebbs and flows, making higher highs and higher lows. And I'm looking for a structural break to where I can take a trade going back at a key area of demand. All right. Now I was, I didn't really start, I didn't notice that it was getting to that area right here on the higher base chart until I got, until a couple moments later. After it had already tapped there, it had already started moving higher. So I was looking for a point to get into the market at on a pullback. So I saw where it pushed up here, it pulled back, and then it broke structure again here to the upside. And there was a demand zone resting right here, as you can see. Also, this area was untapped as well as a mitigated zone, meaning there was a gap back in the market. So I waited for it to get back there. When it got back to that area, I just basically looked for the break and close of a candle above, and I think I got in like around. Actually, I got a little aggressive on this trade entry right here. I got in around like 65 or 64 and a quarter, but safe bet is to wait for the break and close of the candle right there, probably around 69 or 70, and then take the trade going up. So I got into the trade. Pullback, key area of demand resting right here. So we had the higher base zone demand, and then I looked for a breaker structure to take a trade going back up to the upside. Then all I did was look over on my chart to see, were there any areas and where the market really needed to, fill in any means of a gap, whatever the case is. Now there was, of course, liquidity resting right here from the move where it broke structure below. There was liquidity resting at the most prior high, where the move to the downside, where we had a structural break here. So I aimed for that area, of course, which was up here above where this red line is at 192. But I was also aiming for higher areas as well, because I look at my higher base chart going back to it, which put it in this area here, and I was aiming for the market to fill some of these, these gaps right here. But I went ahead and I primarily just took out. When it started really pushing up to the upside, I think I got out around like 97 or 98. We'll go back down to the higher base chart, and I'll show you the trade itself. It started really moving to the upside here, and then I went ahead and got out once it broke above this area here. And ran this area of liquidity at 92 or 93 right there. It moved up a few more points, and I went ahead and closed out, and I picked up like 33 points. So overall, it was like 264 ticks on both of those, on 2 contracts. Okay, so I only entered in with 2 contracts there, but still, that allowed me to, gross roughly $1,320 on that trade right there, minus commissions. But it was a beautiful trade setup. This was the trade that I took right here. I posted it over on the Discord. I'll show it to you. 1 second. And then I'll show you the video of the trade too that I took it. But this was it right here. You can see it right here. It went up, hit my TP. And then I'm going to go ahead and bring over the video so you can see the capture of the trade that I took. I was able to, what am I trying to say here? I was able to, trying to bring it up, to record it. I had actually hit the recording late, but I was able to record that trade, at least the last portion of it anyway. So let's bring it up and come on. Here it is right here. Okay. So here we go on the trade setup right here. At this point, I'm up like 16 points, 14. It kept going back and forth. So my stop loss was right below this area here at the point of entry that I talk about it in so many videos. Back here, right here at the back end of that area there where the market started pushing higher. Okay. The demand zone is resting right here. So as you can see, it's starting to pushing up nicely up to the upside and hits my TP. And then I was able to profit pretty nice on that one setup there. And again, I posted that trade setup over the Discord. But I want to show you another trade setup. This was a low probability, supply setup, which was right up here. And I'm going to explain this to you. I talked about these type of setups before, surrounding liquidity. Okay. Remember what I just said? The market went up here and grabbed liquidity as it was pushing higher after the opening. Pushed up, pulled back, grabbed liquidity from the highs up here, and then it turned back around. But if you notice what it did when it turned back around, it broke structure back to the downside. It broke right below, let me grab this. It broke right below this low right here, okay? So that was actually a breaker structure when it broke back to low. I know my line or my arrow is crooked as I don't know what. But it broke back below that point right there, okay? So whenever you see the market take out or run an area of liquidity where you have a sweep of liquidity, okay, either to the upside or downside, and then it turns back around and breaks structure back the opposite direction like it did here, went up, grabbed liquidity, then came down, broke structure back here, and pulls back. If it pulls back to any key area, especially a high probability zone, that would definitely be a great opportunity. In this case here, the zone of where everything started from on the way down, where it broke structure below this area here at 19,221, it was a mitigated zone already, meaning it was already where it broke and then pulled back and tested the zone. So but that doesn't mean that it still can't reject that area. And if you notice, that's exactly what it did. It broke structure, came all the way back up there to test that same area after where it took out liquidity, and where the moves happened to the downside where it broke structure, came right back up there and tested that area to the almost to the tick, just pushed up a little bit further, just by a couple of ticks, whatever the case is, and then it started to move lower. So keep your eye open for things like that as well. Talked about the market grabbing liquidity, and then what you'll see in turn is where it may move the opposite direction, because you got to think about like this. If they already grabbed liquidity at the top end or took out an area of liquidity, and then they go back down and break structure, why are they going to go back up there more than likely to, run that area? Then this is a kind of a, not say reversal sign, but it's a sign to where they took it out liquidity. They're showing their hand to where they break a structure because they want to go lower on a nice pullback to that area, and then they want to go push lower. Okay, how much lower I don't know, but if you can see, if you were to get into a trade somewhere in this area here, you can see that it was up here at 340, and then it came all the way down here to 190. So that's like 50 points right there. Okay, no, I'm sorry, that's more than that. Whoa, yeah, that's way more than that. Say 350 right there, and then it comes all the way down to really 185 or 190. I don't know why I said what I just said. Excuse me about that, because it came a whole lot lower than that. But that was a nice run back to the downside. So what I'm saying is liquidity sweeps or grabs, and then moving in the opposite direction where it takes out a break structure. Be mindful of things like that. All right, I'm not saying it's going to happen every single time, but when it does happen, those are typically some good setups to keep your eye on, and great trade opportunities. But that's all I want to share with you guys today. I appreciate everyone tuning in. As always, thank you for doing so and watching the videos. If you're not a current subscriber, I would highly recommend that especially if you're really interested in understanding, chart confluence, being able to use a higher base chart and then moving down to a lower base chart to get you into a more precise entry point and the strategy and how I trade, go ahead, sub to the channel right now. Click on the subscribe button. Make sure to become a sub. Also, make sure to turn your post notifications on so you do not miss any of the valuable content or videos that I upload and post each and every day. If you're interested in joining the Discord, the link is down in the description portion of the video. It's the first link. The second link there is to become an elite member for only $6.99. That's where you get the trade breakdowns, where I go into detail about trade setups. There are tons of videos on in that private community already that you can watch. Also, I did a video on market structure with a very good video and the video playlist. Okay, so you don't have to sit here and watch over 800 some videos. You can simply watch the links of the videos that I put in that playlist, and grasp or educate yourself on some valuable information as well. It's only $6.99 a month. That's all it is. It's the second link down in the description. You'll see it says become a elite channel supporter or something like that, or elite channel member. Outside of that, I appreciate everyone tuning in. If you don't mind, please go ahead and drop a like on the channel by clicking that like button. Thank you for doing so. See everyone in the next one.